So good morning, friends. As we inch closer to, I say, first mock test, which will be commencing tomorrow. Let's quickly discuss one more important question from Ind AS 37 and a nice concept, redundancy cost, and there's a newly introduced, recently added question. So do check it out and do make use of it. So this is the question. On 1st January 2022, the directors of Johansson Limited decided to terminate production at one of the company's divisions. This decision was publicly announced on 31st January 2022. The activities of the division were gradually reduced from 1st April 2022 and closure is expected to be completed by 30th September of the same year. At 31st January, the directors prepared the following estimates of the financial implications of the closure. So first one is the redundancy costs were initially estimated at rupees 2 million. Further, the expenditure of the rupees 8 lakhs will be necessary to retrain employees who will be affected by the closure but remain with Johansson in different divisions. This retraining will begin in early July 2022. Latest estimates are that redundancy cost will be rupees 1.9 million with retraining cost of rupees 8.5 lakhs. So the plant and equipment having an expected carrying value at 31st March 2022 of 8 million will have a recoverable amount of rupees 1.5 million. These estimates remain valid. So the third point is the division is under contract to supply goods to a customer for the next 3 years at a predetermined price. It will be necessary to pay compensation of rupees 6 lakh to this customer. The compensation actually paid on 31st March 2022 was rupees 5.5 lakhs. The division will make operating losses of rupees 3 lakhs per month in the first 3 months of 22 to 23 and 2 lakhs per month in the next 3 months of the same financial year. This estimates proved accurate for April 22 and May 2022. So the division operates from a leasehold premises. The lease is a non-cancelable operating lease with an unexpired term of 5 years from 31st March 2022. The annual lease rentals payable on 31st March in arrears are rupees 1.5 million. The landlord is not prepared to discuss on early termination payment. So the closure of the division is estimated and Johansson will be able to sublet the property from 1st October 2022. Johansson could expect to receive a rental of 3 lakhs for the 6-month period from 1st October to 31st 2023 and then annual lease rental of 5 lakhs for each period commencing from 31st March 2024 to 31st March 2027. All rentals will be received in arrears. So the PV factor for 5% is given. Compute the amount that will be included in the statement of P&L for the year ended 31st March 2022 in respect of the decision to close the division of Johansson Limited. Nice question. Lot of chances for 10 marks like how you got Ind AS for the question in your November 24. So do check it out. Let's quickly see what exactly the key things is you should keep in mind is the retraining cost and all those things. What are the treatment to be given for the same? So first you should write, as I mentioned in the video yesterday, about the key provisions of the standard. That is, Ind AS states that the construction obligation to proceed with the restructuring arises when at the reporting date the entity has two codes, that is commenced activities connected with the restructuring or made a public announcement of the main features to those affected by it. So in this case public announcement has been made as we just saw in the question. So the following thing you have to do, so if you see like I was mentioning about the retaining cost, no charge is necessary for the retaining expenses as these are not incurred for the particular current period, but the estimate of redundancy cost of 1.9 million is the best estimate of the expenditure, so they are authorized for that issue. So no treatment to be given for the retaining expenses, and the impairment of plant and equipment of 6.5 million is not strictly part of the restructuring, and in this case the recoverable amount is only 1.5 million. So as per the Ind AS 36, that is very important. You should write this property plant and equipment should be written down to this recoverable value, that is the resulting is a charge of 6.5 million to the income statement. So the balance will be the property and plant and equipment now as on 31st March 2022 will be 1.5 million only. So then the compensation of the breach of contract, the 5.5 lakhs, this is the division is under control, so it will be necessary to pay compensation. The compensation actually paid was 5.5 lakhs. So the same principles we saw to the redundancy cost is applies, so it will be charged to P&L as well. And no charge is recognized in 21-22 with respect to the future operating losses because it relates to future events, and provisions are made only for the consequences of past events and not for the future events. So moving to the last adjustment, that is the leasing aspect. So India 37 states that the two key things that has been tested is the redundancy cost and the owner's contract. So the owner's contract, the one for which expected to fulfill exceeds the benefit, that is the cost that you'll be incurred to get the reward will be more than the actual gains from it. So the provision is made for the lower of the expected net cost of fulfilling the contract and the cost of early termination. So in this case, the net cost of fulfilling the contract is 1.5 into 4.32 minus 0.3 into 0.95 minus 0.5 into 4.32, that minus 0.95, that is the PV factor 5%, which is given. So PV factor 1 is at the end of 1 to 5 years, the cumulative PV factor is 4.32. So if you do that, you will get the answer as rupees 4.51 million. Hope all of you followed. Very important question. So do listen and do revise 2 to 3 times. So best wishes, keep going.